Hey everyone, this is Mark Treichel with another episode of With Flying Colors. I'm here to talk about Kyle Hauptman becoming the chair and designated as NCUA board chairman. I will speak about what I think that might mean or not mean for credit unions, what could be coming or might not be coming for credit unions as it relates to that. And I'll also talk about some of President Donald Trump's presidential orders and what that might mean or does mean for the agency. So I've talked about on the podcast and on LinkedIn that, Chairman Harper rushed, in my opinion, the priority letter so he could get it out under his term, which I think anybody who was in that position would do because he probably knew that it would be happening quick. Not quite as quick as it did the change in chairmanship. You can see that the Trump administration came in loaded for bear. One of the things that them having a 4-year pause and then coming back in, it's kind of like an NCUA board member comes back in, like Debbie Matz and Rodney Hood, when they came back for their second stint at NCUA. They knew where the bodies were buried and they knew how the agency ran, and they hit the ground running, and they were able to be more effective that second time they were at NCUA. So I see, whether you agree or disagree with what this administration wants to do, I believe they will be more effective because of their history and because they probably brought in some people that also can assist them, like the power and persuasions of Elon Musk, et cetera. So anyway, it happened quick. Here we are, and Chairman Hauptman, almost said Harper, Chairman Hauptman on January 22nd released a statement saying he was honored about being made chairman. And then he listed his priorities. His priorities are reexamining the current NCUA budget process, number one. Number two, convening groups of NCUA employees to identify achievable internal efficiencies to reduce unnecessary frictions in the agency's operations. I'm going to pause there and talk about these two items before I get to the next ones. But reexamining the current NCUA budgeting process. So one of the presidential orders kind of weaves right into this because no regulations can be proposed or acted upon without first seeking the administration's approval to move forward on that, which will slow resources being used for building of regulations. But they also put a hiring freeze in place. And that hiring freeze is going to impact, basically what NCUA will do in this situation is it will impact the examination program last, meaning if you have an application in for a merger that's not urgent, or if you have an application in for a bank purchase that is not urgent, or if you're asking NCUA about something that doesn't particularly tie to the exam program, those items are going to be put on the bottom, and getting the exam program done will be on top. Now, NCUA did sort of tweak what they can do on billion-dollar credit unions and above, which will provide some flexibility, but they'd already been taking advantage of that flexibility. As I've said here often, those changes that they made basically were like the airlines saying we're going to add 30 minutes to our each flight so that it shows that we're on time. Essentially, that's what NCUA did because they aren't able to get code 4s, code 5s, and code 3s done on time, but they built some flexibilities in for big credit unions that are code 1s and 2s. So as this freeze is in place, however long it will be in place is unknown, and people start leaving, then this exam cycle flexibilities will be taken advantage of. But again, if it's not an exam item, it might not get done. Convening groups of NCUA employees to identify achievable internal efficiencies to reduce unnecessary frictions in the agency's processes, operations. By the way, friction is one of my favorite words. It comes from my love of that word comes from the book Atomic Habits, which is that you need to eliminate friction on good things you want to happen, and you need to add friction on bad things. Adding bad friction on bad things is like not having any chocolate in the house so that I have to walk or drive to go get it. Removing friction is what he's trying to do so that the agency is more nimble. That's my word, not his word. Every board chair that comes in asks to try and do this. NCUA has stovepipes They have territories just like any organization, but he's going to be convening groups of employees to look at this. What this probably means is you will get some people at NCUA who are KMA, meaning they are eligible to retire, that will speak their mind saying, we've added a layer of nonsense here, we've added a layer of nonsense here, we've added a layer of nonsense here, in their opinion, of course, and that they will try and whittle away at some of that. I will say that NCUA appears to have become a little bit more bureaucratic over the last few years, that things have slowed down with making sure that every word is possibly correct in every item. The slowing of things that came through the chairman's office under the current structure is something that Kyle Hauptman might be able to look at. When I was at NCUA as executive director, I had one deputy executive director. They've now have budgeted for 3. Now they just lost their deputy executive director and have a new person either sitting in or temporarily assigned into that. And they have 2 other positions at that grade level. So they might get caught up in the hiring freeze, possibly, so that might not allow them to add that flexibility there. But regulations are going to slow, and hiring freeze is in place. By the way, there's also a presidential order out there that talks about returning to the office. And from what I'm seeing from OPM's guidance on that, there doesn't seem to be a lot of flexibility built into that. And it says that if you are telework or remote, that you need to move and be in one of the nearest offices. Well, NCUA only has 3 offices. They have Alexandria, they have Austin, Texas, and they have Arizona, the Phoenix, Tempe area. And so 50 miles is not a very big area of the country when you only have 3 offices. So they have a lot of remote people. At NCUA, I actually was the exam staff have always been remote. When I started with NCUA back in 1986, you do your work at your house, you go to the credit unions, and that's how it's been set up. It's kind of a very unique structure. So this return to office impacts NCUA in a pretty material way. Because of that, it used to be this way, and I think this is still this way at FDIC, is that the FDIC would have rented offices around the country where the examiners could go in and do their exams. And I'm sure they are even more decentralized than that. But, before President Trump came in, I did have someone at the agency ask me what my thoughts were on how they could achieve shrinking agencies. And I told them that I didn't anticipate that they would do what's called a reduction in force, because the problem with the reduction in force in the federal government is you have these bumping rights. So the person, you eliminate a regional director, for example, that person can bump into the associate regional director at their same pay, so you don't save any money. Then the associate regional director can bump into the supervisory examiner. Then the supervisory examiner can bump into the problem case officer, the specialist, and it cascades all the way down. So all that you do is eliminate the positions at the bottom, and you don't really save any money. I conjectured at that time that if they were going to be draconian and aggressive in this, maybe they'd say, hey, we're moving the central office to Missouri, and everybody needs to move to Missouri. That's reports to any office. That's how you achieve the turnover, because they either move and they've got their spouse that has to move. I moved for NCUA 7 or 8 times, and it worked out for me because it led me to being a regional director and achieving all that I could at the agency, and now positioned me for doing what I'm doing. But not a lot of people want to do that. So when you tell somebody they have to move, it could lead to high turnover, but that could be what the Trump administration is trying to achieve, to shrink government through draconian measures that are within the rules, but there's a lot of protections as a federal employee. But if you are told to move, you have to move, and they can get rid of you otherwise. They can terminate you, and if you're eligible for severance, you can get severance. I believe if you have less than 25 years, you get severance. If you're over 25 years, you can start collecting your pension earlier. So I know I know there's a lot of angst at NCUA because of this return to the office. That the agencies had to communicate a plan to OPM by last Friday. And it'll be curious to see how this all plays out. Quite frankly, if the plan of the Trump administration is as rigid as it appears to be, they can't have everybody go to those offices because there's going to be nowhere to put them. So not only does so the central office building, which is virtually has been empty. It's my understanding they've had people come in maybe one day a pay period. So everybody comes in on Wednesday or everybody comes in on Tuesday, or they rotate it. They went from being virtually empty to having too many people there. They're going to have to kind of set up cubicle areas. And then there's how does the contract with the union play into that? So the union folks may have a little bit more protection than the management folks. If they're in management at NCUA, I expect there not to be a lot of flexibilities as it relates to whatever plan they put forward to OPM. So definitely interesting times at NCUA right now. It's more interesting being on the outside helping credit unions right now, as it were. I know there's a lot of stress at federal agencies right now, but the pendulum had swung so far with everybody being remote to the nth degree. This administration's trying to swing it back. I'm not going to get into the politics of the DEI than to say we're spending a lot of resources at every agency relative to that, and they're trying to curtail that. That's going to create some efficiencies. They have affinity groups for, imagine what every group they might have an affinity group for, where they can have meetings and talk about how their affinity group needs to be treated better, how the agency could assist them. All that soft stuff is going out the window, but it's going to create some flexibilities, and that may be one of the things that Kyle is looking for. Kyle Hauptman, Chairman Hauptman is looking for here. Okay. His third priority, promoting the appropriate use of artificial intelligence as a tool for NCUA employees. One goal is enhancing productivity, but it's also true that regulators who use technology are more apt to understand why the regulated use them. Now, jokingly, you could say, hey, maybe NCUA can have AI start writing the reports for examiners. And quite frankly, there's probably some examiners out there that have contemplated or are already doing that. I don't believe they have any policies around this area. I think this is great, a great priority for him to say, hey, we're going to look at how we can use it. But I love that he says that one goal is enhancing productivity, but it's also true that regulators who use technology are more apt to understand why the regulated use them. So if NCUA understands it because they're using it, they're going to understand why credit unions use it, whether that's for underwriting, which NCUA and CFPB have been critical of, or whether that's for, data analysis or whatever the credit unions are using it for. It's a tool that's not going away. I think it's exponentially increasing. You're not hearing anything from me here that you don't already know, but I think it's good. It's very positive that he's pointing this as something that he wants NCUA to look at. And maybe with some of the other inefficiencies that he's pointing to, maybe that's where they can use some of this time. His next item, focusing on true financial inclusion, which means removing barriers to de novo credit unions and removing the pain points that have led to fewer and fewer small credit unions. NCUA should be mindful that the only people who think compliance is easy are those who don't have to do it. What is it they say about teaching? Those who can do and those who teach. I'm saying that tongue in cheek, but that's kind of what he's saying here. And so focusing on true financial inclusion, removing barriers, this has been studied a lot at NCUA. I know they've made some progress here. They've been a little bit more flexibility getting some new charters out. And by the way, if you're interested in new charters, I have a podcast with Keith Stone of The Finest, who chartered another credit union in New Jersey, another police officer credit union with the assistance of Rick Mum. And if you're listening and you want to do a new charter, I highly encourage you to track that podcast down because it talks through a good way of doing it. And those two guys are great resources in that regard. I'm all for new credit unions. My thoughts when I was at NCUA, not that I could get the Federal Credit Union Act or move the mountains needed to be moved with the board. charter a lot of them, you lose a few of them. It's really budget dust if some credit unions fail because of it, but you get some new charters out there. I was all for spending a little money to make these things, to create opportunities to make these things work. And it's probably where he's coming from, is he want, if you lose $200,000, $300,000 there in the insurance fund, but you have a lot of small credit unions, which, oh, by the way, can tell really good stories about financial inclusion, that you can go to Capitol Hill and tell Capitol Hill, hey, this is what's going on. This is why credit unions are different. It's those anecdotal great stories that get Congress to pause on taxing credit unions. And from what I'm hearing, there's a lot of chatter about credit unions possibly being taxed, which is why you should go to America's Credit Unions Governmental Affairs Conference. If you're listening to this and you're going to be there, please reach out to me, because I am planning to be there as a member of the press for the first time. I'll be there representing the podcast. I may actually be recording some podcasts. If you're listening and want to record a podcast, reach out to me at mark@marktreichel.com or via LinkedIn. I would love to do some recording of podcasts there. But it's a very important year to get to GAC because of the merger, because of where we're at in our country right now, because of the taxation that could be coming for credit unions. It's a remote chance, but there's a lot of chatter about it from the people that I'm hearing. And again, when so many people show up for GAC and parade through the doors of their elected leaders, they give pause to attacking credit unions because there's other things that they can focus on. But your voice matters, and it matters most at GAC. All right, codifying, next priority, codifying our procedures to protect Americans from regulation by enforcement. For example, no enforcement action should ever set, even clarify, a policy. In America and other free societies, the sequence is set speed limits, then give speeding tickets. No one has any obligation to be aware of someone else's ticket. So I like what I think he's saying here. I think he's going to need to clarify what he means here, but I can read a lot of things into this. One of the things I read into this, and it was pointed out to me by Steve Farr, who's been on my podcast, is maybe this is a reference to Chevron. And as a reminder, Chevron is a Supreme Court decision that basically says that agencies can't regulate by issuing letters to credit unions, that their regulations can't add layers that were in what was meant by the actual act of Congress. So in this scenario, the Federal Credit Union Act is an act of Congress. The regulations are put in place to implement that and are ripe for the opportunity for lawsuits where an agency overextends what they were supposed to do at some juncture, according to what Congress actually intended. And pushing the envelope on regulations under the way the Supreme Court decided Chevron isn't going to work anymore, at least under the current state of the law. And at some juncture, different agencies will push this. Probably under the Trump administration, they'll be encouraged to do so, making it harder to issue regulations that push the envelope. But extrapolate that even further. NCUA's exams are based on safety and soundness. They're based on a lot of guidance. The guidance is not regulation. It's just guidance. And even at FDIC issues their guidance publicly, which makes it a little bit more binding than NCUA's, because NCUA is just penned by the chairman, theoretically, right? Staff recommends it, or the agency head, the chair decides they want to issue guidance via a letter to credit unions, like the priority letter to credit unions, like third party, an older one that's out there, third party, how to manage third party risks, et cetera, et cetera. All of those letters are not regulation, but they are doing exams by them. They're cited as best practices. They're cited as you need to comply with safety and soundness. And the hook is to one sentence in the Federal Credit Union Act that says it's based on safety and soundness. Now, as a former regulator, in some ways, this scares me a little bit because the runaway trains of the Code 5s, or there's an institution that gets out of control, could end up costing more. But in the same token, NCUA regulates by these policies that are not regulations, that are not acts of Congress. So I believe this is what he's pointing to here. No enforcement action should ever set, even clarify policy. There are things that go into document resolutions that the NCUA board is not aware of. being done. And I think their heart would skip a beat if they saw some of the things that are out there, quite frankly. A letter of understanding that says you need to do X, Y, and Z, and you have to have these people on a committee. You need to do this. And it's a little full of themselves, for a lack of a better term, in some of these exam things that they do. And I believe he's referring to that to try and rein some of that in. It'd be a difficult time to be pivoting at NCUA right now, figuring out, okay, what exactly is what their marching orders are here. In the same token, if you've been an examiner for 25, 30 years and you're listening to this, you're going to keep doing what you do until someone, points out that it's wrong. If you're a new examiner, maybe they'll be pivoting in some of the training, but it's hard to move the ship that's been going in this direction. Kyle Hauptman is going to be trying to do that, but he's got his hands full, and this is an important area that I think he wants to take a look at. Very curious if he seeks input from credit unions. If you do go to GAC and get an opportunity to talk to him about any LUAs or document resolutions or examiner findings that you thought were pushing the envelope, so that he's aware of those things. If he's not aware of them, he can't do anything about it. All right, next up, making clear that credit unions and their members are best positions to assess their community's climate risks. So they put in their budget in the Office of Examination of Insurance, I believe they were going to add one position to work on climate risk. I'm guessing that, the hiring freeze stopped that, but if it didn't, I'm guessing that the new Chairman Hauptman would have said, you're not going to be filling that one anytime soon. And again, there's two political sides to that story. Everybody has their own reality on what they think the climate risks are or are not. And anyway, they're basically saying you can do what you want as a credit union. We're not going to be touching it. Next up, reassessing NCUA policies that may even inadvertently dissuade credit unions from serving low-income areas. This includes language around overdraft policies, particularly for credit unions located in states with especially punitive government late fees and penalties. I did see there's a press release or a story on LinkedIn that Hauptman tied to states that have especially punitive government late fees. I'm going to see if I can find that by clicking on LinkedIn here. Bear with me for a moment. Kyle, you're going to see that if you're listening, you're going to see that I'm looking at your profile. All right. Let's see. Yeah, here it is. He forwarded something from the New York State Department of Financial Services. He said it may be notable that, like most state governments, New York State itself charges late fees and penalties in excess of what they are outlawing here. So I love this point. The post that he's forwarding says, today, the Department of Financial Services proposed regulations to enhance consumer protections against unfair overdraft fees. Their proposed regulations eliminate the most exploitative and deceptive banking fees, cap overdraft fees, strengthening customer communications, and establish stricter transaction processing requirements. By the way, if they were doing this, the states that they're doing in this, I believe, if you're a big credit union in those states, why haven't you converted to a multiple common bond credit union that has a association that allows you to freely sign up members in a appropriate legal way as a federal charter, and have to, instead of having to deal with draconian regulations like this? But it goes on to say, targeting unfair and exploitative overdraft fees and practices strengthens consumer protections while preserving access to essential bank services, prohibits predatory practices, and improves transparency, fosters accessible and affordable banking services for all New Yorkers. And Kyle's point is, Chairman Hauptman's point is, that New York has draconian fees of their own, yet they're saying that the financial institutions can't do that. I love that take. I think it's very creative, and I think it is very accurate. So the other thing is, and I've talked about it a lot on here, Chairman Harper and the Biden administration created the terms junk fees. Chairman Harper talked about how fee income is a concentration risk, and it's only a concentration risk because he said it was a concentration risk. There's things that that happened at CFPB proposing this for larger banks. had Biden continued, or if Harris had been elected, you could continue to see a full court press on fees. I think it's great to see that this administration is going to pivot on fees, because fees are a reality of life, will help some credit unions survive if they're done judiciously. And I love the fact that, one of the big pluses right now is that there may be a little bit more breathing room on fees, which might slow the parade of mergers that are happening. So I really, really like that one. Lastly, Hauptman talks about right-sizing credit unions' obligations where possible under the Bank Secrecy Act, including NCUA's regulations surrounding suspicious activity reports. I'm very curious what happens here. I'm thinking that there might be some inside baseball here, where we see President Trump talking about people on the right being thrown out of banks. If you haven't seen that, you can see it on YouTube, or you can read about it pretty much anywhere. But I believe this has a little bit due to what is viewed as an overreach of the Bank Secrecy Act and abuse of SAR activities. I don't know what I think about this one yet, because I think those reporting systems do play an important role in the world of terrorism, et cetera. However, if we're going to open up the world of Bitcoin, et cetera, which is a way that people are able to avoid these SARs, I guess what's the point of having a strong Bank Secrecy Act if you can just avoid it by going to the crypto world? And I'm not going to, other than the fact, that Trump and his son Barron are big into the crypto world. There's some things that were announced that I might cover in a different podcast here relative to that and what it means. Kyle Hauptman's been big on blockchain. Kyle Hauptman's been big on crypto. So you can expect to see him very supportive of fintech, even though he doesn't really touch on it here, but I anticipate to see that continuing to happen. So lastly, and I think I put this on LinkedIn the other day, February 6th, I want to say, NCUA is having their webinar on the priority letter. Typically, those are pretty plain vanilla. They read through the letter, they ask questions, they avoid the difficult questions, they answer the softball questions, they get in and they get out. It's kind of like, being ahead in a football game and you run the ball and you run the clock out. That's how those things go. They run the clock out. Well, they've scheduled that, and they had it planned before there was a change in chairmanship. So now, sometimes those events, typically under Chairman Harper, those events are kicked off by the chairman, says some nice words at the beginning, he departs, and then they do their reading of the letter. So what's going to happen with Hauptman? Is he going to kill that call? Probably not. Is he going to do an introduction and say, hey, I'm reviewing this letter to credit unions, there's some changes coming along the lines of the fee side, which I'm de-emphasizing, and maybe just walk through his priorities? Will he do an opening? I would guess that might be what he does. Could he pull the letter to credit unions? Because again, if you go back on their website, there are letters to credit unions that are 20 years old, 15 years old, 10 years old, that are still active and still cited by NCUA. They pull them when they want to pull them. So Hauptman, and then linking this back to his earlier statement about, giving tickets and not establishing enforcement actions, not establishing or clarifying policy, he could go back and pull a bunch of these letters. And a matter of fact, I mean, if that was me and I was of the bent that he is, I'd go back and pull a lot of letters saying, hey, these aren't binding anyway. They shouldn't be out there. Use your own best practices, which then makes it more difficult for the NCUA examiners to use those as part of their examination. I'm not saying that's what he should do. I'm saying if I was of his political bent and trying to do what I think he's trying to do with this, that's probably what I would do. So I'm very curious to see how that meeting goes. Is it going to be the same old plain vanilla, or what of those options I've already discussed might he take, or which path might he do in that regard? All right, I'm losing my voice here. I'm so excited about all these things. I'm trying to think if there were any other presidential orders that I was thinking about. I talked about the hiring freeze. I talked about return to office. And I talked about one other one, which is escaping me at the moment. Lastly, if you are interested in being on my podcast while I'm out at GAC. Reach out and we'll see if we can set something up. All right. This is Mark Treichel. I appreciate you listening as always, and I hope you'll listen again soon.